Hey there traders, it's Lucas from the Commitment of Traders Club. Thank you so much for joining me over on Commitment FX today. I've got a fantastic video lined up for you in which we're going to look at the only indicator you need to use on your charts to help you get on the right side of the market and take better trades. So without further ado, let's get straight into it and I'll see you over on the chart. Let's go. So traders, on the chart we are looking at Gbp Usd. What if I told you that I know with this indicator that the market is going to reverse at a particular point? You'd say I'm crazy. There's no indicator that will tell you that a market is going to reverse. You've got to use price action. Well, no, that is where you're wrong. There is an indicator or a tool you can use which will show you the correct side of the market and whether or not the market is forming a reversal. And that indicator is called the Commitment of Traders reports. For those of you who don't know what they are, every week banks and institutions have to publish their reports on the positions they have open and the positions they have closed. And what that then tells us is if we compile them over the number of weeks, we will be able to see if they are shifting from long positions to short positions or vice versa. And let me show you how powerful this indicator is, and when used in conjunction with other tools and indicators, how you can become a better Forex trader today. So what we can see on this Gbp Usd chart here on the daily is we've had this huge bullish movement to the upside, which has smashed past our previous lower high, forming a new higher high, although it didn't break past the recent high. So you'd be crazy to look for sell opportunities in this massive impulse to the upside. Now, yes, we are very overextended, so some may say we will be forming a retracement, which will likely form resistance here, and you'd be absolutely right on the most part. But before I take this trade, what I'm going to do is head over to the Commitment of Traders Club, where I publish the own Commitment of Traders reports. Go over to Club Members, and we're going to go down to GBP as we're trading the USD. And at this particular moment, we are looking at the end of July, beginning of August. So looking at the Commitment of Traders reports for the GBP against the USD, at the end of July, we can see, particularly on the 20th, that banks and institutions have opened 11k net positions to the short side and closed out a small amount of longs in this instance. Now that's all well and good, but using this tool we need to look at the past data as well, and what that tells us is that for the past 5 weeks or 4 weeks previously, institutions have opened short positions and then subsequently closed out several long positions with the occasion of opening some positions to hedge against their short positions they're opening. Furthermore, if we look at the chart on the net positions, we can see that from the 25th of May all the way now, where we're back testing obviously to the 20th of July, that they have now closed from 30k net positions to the upside, now down to minus 5.5k net positions. Now that is a clear shift from being net long to now net short. What this data is telling us is that there is a reversal imminent, that the true direction of the market is to the downside. Now, if you're a swing trader like myself, back over on the chart, you will want to trade with the trend, especially long term. And the best way of finding the trend is zooming out onto the weekly and having a big understanding of the market. And what we can actually see is, although we're in this nice uptrend, the overall trend going back way to 2014 is a downtrend. So it's not unusual now that after especially posting this recent high, which found resistance at the previous high, that now banks and institutions are changing their positions from long to short. Put this into perspective and let me show you the results that we can have. So we've had this long bullish pressure to the upside. We've formed, going back to technical analysis now, an area of potential resistance in the fact that we've got a wick rejection at this area. Now the Commitment of Traders reports tell me that the market is going to melt to the downside. What they don't do, unfortunately, is tell me when that is. And that's where we have to keep things simple and use another indicator which I like, the Fibonacci. So if we grab my Fibonacci tool, we take it from the recent high to the recent low, and up comes the magic number, the 0.618. To add our confluences on our side, we want to load these confluences in our favor. We've had a previous rejection at this 618 zone, and now we're coming for a second tap of this 618 zone with already on the daily a wick rejection forming. So we're having a double top here, if you like, and we know that the market is going to melt to the downside. If you didn't have access to the commitment of traders reports, you'd be looking for buys here, of course. So now that we know these two things, that we're at a key level where the market is likely to melt to the downside, we know it's going to happen. All we need to do now is zoom in to a lower time frame to get that entry perfect. 4 hour is a fantastic chart, a time frame to see the true candle pattern because it reduces the market noise. But if we want to zoom in further, we can use the hourly or the 15-minute time frame. We'll use the 15-minute for those of you who are day traders out there. This isn't just a swing trading strategy. So what we can see is the market has already started to reject this area. We can move that down if we want to be a little bit more accurate. The market has already started to reject this area. We haven't yet broken below the low. We've actually formed a higher low. So we want to see the market switch now. So patience is key. Okay, now you can start to see some strong bearish movement come in with these candlestick formations. And as competent traders, we want to capitalize on the retest. So if we break below, which we're just about to do, we want to capture that retest and then we can enter the trade. Fantastic, broken below. There's our retest. There's our wick rejections, which we like to see as a technical analysis trader as well. Can move it down. It doesn't always form spot on the money, but close enough. And I'm going to put in a short position. And my short position is going to look something like this. Now you're going to say, Lucas, you're crazy. You've not even got a one-to-one. No, I haven't got a one-to-one. What I am going to do is I'm going to zoom out onto the 4 hour chart. And I'm going to drag my target to the downside. And a long way to the downside. We can even move it up a little bit. So what I'm aiming for is a 1 to 8 roughly risk to reward trade because I know that the banks are moving their money to the short side. If you use the EMAs or the moving averages, this is telling you buy if you're into that. This is also telling you buy if you're into that. But the commitment of traders reports is telling you to sell. Let's go onto the daily chart and see what happens. So straight away, the next daily candle tapped us in, or if we did a market order, we're in already. Let's stretch it out and see how the market plays out. And there we have it, guys. A fantastic 1 to 8 trade, which we took over on the Commitment of Traders Club, based on the knowledge that the market is going to melt to the downside because the banks are doing exactly that. And you can clearly see this on the chart, that once the banks and institutions have built up their positions from plus 30k to the long side to now minus 5k to the short side, with the opening of many short positions and the closure of the long positions, the market did exactly as we anticipated it to do. And that is the indicator which everyone out there should be using. If you go on any particular broker, you may be trading with, Oranda or IG or CMC, whatever broker you use, go onto their homepage and tell me in the comments below the percentage of people that lose money with that platform. It's going to be over 70%, I'll tell you that for a fact. And that's not to do with the broker. That's to do with how the money works and how the market moves. If you are a retail trader and you're not using the Commitment of Traders reports, you are part of the crowd. And if you go on any sentiment platform which tells you the retail sentiment, there's a reason that they're all longing and then the market shorts and they lose their money. That's how it works. The banks have allowed this bullish pressure to push to the upside. retail traders out there would have had a long order, probably something looking like this perhaps, with a very tight stop loss, thinking yes, we're going to rally again up to the 12500 area, and immediately stopped out. There's the liquidity needed for the banks, and they enter their position at the magic number, the 618. Traders, I can't get through enough how easy this indicator is. It doesn't go onto your chart and make it look pretty like lots of others out there, but it is so useful. And without this commitment of traders report, we would have not known that the market was going to melt to the downside, and you would, of course, perhaps found finally that this is a downward trend, perhaps too late. Now, to bring this back to the live market, which when I first started out, I always wanted to know, yeah, okay, well, that's great. How did that work in the live market? This is a very recent trade, as we know, so we'll move it along to the most recent time, which at this video is mid-September. And what we can see that the market then rallied further to the upside. Looking back on the commitment of traders reports, you can see that from this massive impulse to the downside, which ended on the 19th of August, banks have reignited some long positions, plus 1.5 there, plus nearly 2 here, and they closed some short positions. Now, the reason they did this was to take their profits from this bearish push to the downside. Absolutely normal. But then more recently, we're seeing, and if you are interested in getting your hands on this information, join our club. More recently, they have closed out their long positions again, and they're starting to open up short positions, which we're now even further down in the net short positions than we were previously. Now, what does that tell us? Here's a free signal for you, for those of you who aren't club members. That tells us that the market may well rally a little bit higher and then melt again to the downside. It happens again and again. So traders, tell me below in the comments if you've ever used the commitment of traders reports. If not, why not? And if not, I bet you will going forward. Back test it and put it to your own judgment whether you find it useful. Now traders, there's no commitment of traders report out there which is as useful as our own, which gives you the historic data, which is what you need. If you are interested in joining us, head over to the Commitment of Traders Club, become a member, get access to this valuable data and indicator, and revolutionize your trading today. If you have any questions, let me know in the comments. I'll meet you down there. And until next time, happy trading, and we'll see you guys next week. All the best. Bye-bye.